Well, the negative flows are relatively small in the bigger scheme of things. It's some of the old, I think, products that we've discontinued simply running out. We are a mature business. People save money to withdraw it, particularly in tough times, and that's exactly what you'd expect.
So you're not concerned about that number?
No, we're not concerned about that number at all. In fact, if you look at the overall business, we were able to get 22 billion of net flows into the business, and a lot of that would come from SPF, not mainly in the life insurance wrapper, but in the more market and investment part of things. And that's the way we look at our business. We don't look at it as, you know, we have to put people into insurance or in investments or in savings or in this product or that product. We sit with them, we see what we should do, and in tough times with the kind of volatility that we have, we go with products that are much more flexible, where you're not locked in for long periods, and that is exactly the result. So you get a flow out of the insurance products, but we capture virtually all of that and more on the investment and savings products where people have more flexibility.
Discretionary capital sitting at 4 billion rand. Now, you indicated that you used your capital in 2009 as a buffer, and you said that you'll be looking for profitable growth opportunities in 2010. What do you plan to do with this capital in 2011?
We've used about 1.3 billion in 2010 of the capital. But we added more, so on a net base we went up from 3.5 billion of surplus capital to 4 billion, although we used well over 1 billion. Going forward, we've earmarked around 1 billion or maybe just more than that for strengthening our relationship with our partners in India. We're in talks. We'll announce something when we reach some conclusion to that. We've added another sort of 500 million for the Indian insurance businesses when we were allowed to, from a foreign direct investment perspective, to increase our stake from 26, which is the limit in India at present, regulatory limit, to 49. That takes care of about 1.5 billion. And then we have another 1.5 billion in the pipeline for smaller projects in South Africa, in Africa, and Europe, and in the investment space. I think 14, 15 projects that we think will take up another 1.5 billion, takes care of about 3 of the 4 billion, and then we've earmarked around 1 billion for share buybacks in times of price weakness.
Let's look at the Indian markets. You say that you're going to up your stake to around 49%. You clearly see the growth potential of that market. What is happening in India in the insurance sector at the moment, and what type of a contribution do you see India ultimately having to your embedded value?
Well, on the life side, we've had a difficult year. We've had increased regulation there, product regulation, where the profits that you're allowed to make in certain types of products have been capped, which is, well, it's still better than what the situation that we have in South Africa and the UK, but it's perceived, the suddenness has been perceived very badly. I think we've come through that well. Going forward, we're fairly confident on the life side that we'll be doing well. On the general insurance, the short-term insurance side, our business has grown extremely well. We have over 1.3 billion policyholders, where 3 years ago we didn't even have a business. So it's massive growth, it's doing well, it is profitable, and it made a small contribution. We reinvest most of the profits back into the business, but we're fairly bullish about that. Of course, we've earmarked the money. We've had the money available for the past 2 years to up our stake, and it's a regulatory issues. Things do take longer in many of the democracies elsewhere in the world, also here in South Africa, to execute on. And we hope we will be allowed to increase our stake to 49% this year.
Word is that some of your staff from South Africa are relocating to Kenya and Zambia. Are these two markets that you're particularly focusing on in Africa?
Yes, amongst others. I mean, but overall in Africa, we're focusing on the Anglophone countries where they speak English. They were all British colonies, so their regulatory system is not foreign to us. So we focus in West Africa on the two powerhouses, Nigeria and Ghana. In East Africa, Tanzania, Kenya, Uganda, and in Southern Africa we have Namibia, Botswana, Zambia, and Malawi. And it's going well in these countries.
Let's turn to the newly merged MMI they've indicated they're expecting a lot of growth from the low income segment of the market. With competition heating up on this segment, how do you expect that to play out for you?
Well, there are two things about the market. It is a massive market in South Africa, the lower end. I think secondly, there's still a big untapped portion. So there is room for more people to enter. Unlike the top, if you get fierce competition, it is like dog eats dog. Everybody is already being served by one or another company. So you have to take away market share from, and clients from individuals. The lower end, it's different. There is an untapped portion. So that's where the focus is on at present. But pretty soon, that market will also become saturated, and then the competition will be tougher. And very formidable competitors. Metropolitan brand is pretty strong in the lower end of the market. So we'll have to get our act together.
Now, given the fact that the regulation in the insurance business is being reviewed, you've got the likes of the Financial Services Board, a solvency assessment and management project coming online, which is threatening to change the rules of play for the insurance business. How do you see this impacting your business model?
Well, it is definitely going to impact the way we run the business, but I think change is not new. Over the past 10 years, we've seen massive changes in the insurance industry, from the statement of intent that we've had, really looking at value for money for clients, doing things differently, really looking at capital management. We've come through the crisis. So that's part and parcel of what we see as our business going forward anyway. It is going to impact, and so we put a lot of emphasis on the SAM project, really looking at capital. But as we've shown, we're well capitalized. Some people say we have substantially more surplus capital and discretionary capital than the 4 billion that we've actually put aside and announced. We're not going to be aggressive on that and squeeze substantial additional capital out in the shorter term until we have a better grip on what is required of us under SAM. But we think we're well capitalized and we're well set. And certainly on a relative basis, I think it's going to be, business as usual for us.
So overall, if you're looking at the company from a whole, where do you see the key hotspots for new business growth in 2011?
For us, we're still struggling in the employee benefit space. It's an area where there will be regulation that opens up opportunities for us, but we also have some business issues. So we'll be focusing on that, placing much more emphasis on that. We'll increase the drive for efficiency. We'll try to diversify our distribution a little bit more. We've earmarked some money. We're busy with two smaller deals in the pipeline. And then we'll try to diversify our business more, add much more of the health business, partner strongly with Sanlam on the short-term insurance side, maybe offer more credit to our clients, particularly in the lower end of the market. We've been doing fairly well there. We deal essentially with clients with money. So if they want to borrow a little bit, we don't run the risks that, some of the big risks and credit risks that some of our peers run in the banking sector. And we would like to exploit those things. And then we'd like to diversify a little bit more. We've spoken about Africa and India. So that for us is the focus. It's quite a few areas, but it is not about one big thing. We're not betting on a big thing. We're betting on, 10 or so smaller things, of which we hope to get 8 or 9 out of the 10 right.